account, the following trial balance was extracted from the books of Safaricom Limited as at 31st March 2023. We have ordinary share capital, preference share, share premium, 8% debenture, account payable, account receivable, sales, purchases, bank overdraft, discount to sale, discount allowed, building at cost, furniture and fitting, accumulated depreciation for the two. Then we have inventory, return outward, director's fee, and we have admin expenses, selling and distribution, budget written off. Then we have allowance for doubtful debt, then retained profit, investment at fair value, investment at fair value trust. That is the question. We are given additional information. The company remains or maintains a gross profit margin of 10%. As at that point, March 23, account receivable balance included 50,000 due from customer who has been declared bankrupt. So if a customer has been declared bankrupt, that means we don't expect to receive that money that the customer owes you. The following, the allowance for that debt is to be adjusted to 5% of the account receivable as at 31st March 2023. As at that first March 2023, administrative expenses accrued amounted to 175,000, while the prepaid selling and distribution expenses amounted to what? Amounted to 75,000 shillings. The company paid interest on the debenture from the year ended that first March 2023 on 5th of April 2023. Depreciation is to be provided as for building 2% per annum and on cost. Furniture and fitting, 10% of annum, 10% per annum on reducing, but the company directors propose that the preference dividend be paid, a dividend of 10% on ordinary share be paid, 2,500,000 be transferred to general reserve. Require the value of inventory as at 31st March 2020. That one we did. 2. Statement of profit or loss for the year ended at 1st March 2023, and then statement of financial position as at that date. Now, here we are. We want to solve these. So our shillings are in 1,000, shillings are in 1,000, shillings are in 1,000. Maybe adjust to column that. So we shall have sales. So class, can you give me sales? What is our sales? From the question, give me the sales. What is our sales? Sales in Gabi. And Lamek, please attach that paper again. Please attach the paper again in our chat box. Also, those who are joining late, please attach the paper. Chat box. Just attach it. So our sales in this case is 120,000. 120,000. For this one, do very fast. So let's cost of sale. Let's cost of sale. Remember, this company is Safaricom Limited. Statement of profit or loss. A statement of profit or loss. Safaricom Limited. Statement of profit or loss. Safaricom Limited. Statement of profit or loss. Statement of profit or loss for the year ended. 1st of March 2023. 1st of March 2023. 1st of March 2023. Now make you not able to attach. Allow me to see whether I'll attach this again and make sure that you download from your end. To get the full paper. Yo. And you download from your end. So if I look at the cost of sale, the cost of sale here was not given direct. So we have purchases, or we start with the opening inventory. Opening inventory. And our opening inventory, you are given here, you are given opening inventory class as 10,500, 10,500. You add purchases up and end add purchases. So when I add purchases, the purchases given here is 105,500. 500. 105,500. Then you less what? You less return. You less return outward. Return outward. Yes, and yes, 2,000. So when you get that, you're going to get that a growth here. When you get the growth, you're going to get a growth here. So if you do this, how much are you getting? Itakuwa 105, 10,500 plus 10,500 plus 105,500, and then we left what? We left 2,000. I'm getting 114,000. 114,000. Remember, we are computing the cost of sale. So 114,000, we left the cost of sale. Less cost of sale. Less the cost of sale. Not cost of sale, but closing inventory. We left the closing inventory. Less the closing inventory. So the closing inventory in this case, we are going to get it. We're going to get it through indirect way. In this case, we have been given the gross profit margin. Gross profit margin. The total is 20%. And we know that gross profit margin is given by gross profit over sales. So we have 20% is equal to gross profit over sales. Our sale is 120,000. So our gross profit in this case will be 0.2 times 120,000. So 120,000. So my gross profit in this case will be how much? And you compute for me 0.2 times 120,000. What are you getting? 0.2 times 120,000. 0.2 times 120,000. 0.2 times 120,000. 20,000. Getting 24,000. Getting 24,000. So class, if that is my gross profit as 24,000, and I know that if I less X here, I'm going to get the cost of sale. Or the cost of good available sale, or the cost of good covers. Available for sale, and cost of sale. Cost of sale itself will be this point. When I take this minus this, I'm going to get 24,000. That will be my gross profit. That will be my gross profit. So in that regard, I'm able to reverse this and get my cost of sale. It will be 120 minus 24,000, which will give me 96,000. Now, can I get my cost of sale here? Yes, I can get my cost of sale as what? 114 minus 96. 114 minus 96. 114,000 minus 96. That's what happened? Minus 96. So it is 18,000. Now, whatever that I wanted to get is the cost of sale. So I can eliminate this one, other things here. I can eliminate other things here. I can eliminate any other thing. Cost of sale pattern 96,000. We can say that less cost of sale, which is 96,000. 96,000. I get gross profit. Gross profit will be the difference here, which is 24,000. Add other income. Other income. So in this case, other income will be simple. Just check what will be our other income. The question: did we have anything that will be termed as other income. Can you look at the discount received of 325? Yes, discount received will be falling here. Discount received. Discount received plus 325 will be here. Discount received. Then we look at our allowance for doubtful debt. We check whether there was an increase or decrease. And remember, decrease in allowance for doubtful debt will be an income. So that the receivable value was 8250. The receivable value, look at the trial balance, receivable, account receivable, we have 8250, that is our account receivable. But we were told that in the additional information number 2, we were told that account receivable balance included 250,000 due from a customer who was declared what? But so what will be our net receivable? Net receivable will be equal to 8250 to 250 minus 250. This is 8,000. And allowance for that debt, we are told that 5% of 8,000 to be 5% of 8,000, which will remain to be 400. 5% of 8,000, which will remain to be 400. Now, in that case, we look at what was provided in the trial balance. In the trial balance, you are given allowance for that debt in our second last that last paragraph or that last law. You can see allowance for that debt as at that date is 450. So 450. So in this case, I can see we got 400 and we had 450. So this was an increase of 450 minus 400. That is an increase. An increase of increase in allowance, decrease. In fact, it was a decrease in allowance for doubtful debt. Decrease in allowance for doubtful debt. Decrease in allowance for doubtful debt. Class now, in this case, we have 50. What will be the total income? Total income in this case, class. It's simple. We just teach this and then we add 400 to be 24, 375, 375 as our total what? Total, it will be our total income. Then we left expenses. Plus, always start with the bad debt written off. Bad debt written off. You can adjust to this column is 250. 250. That is the bad debt that was written off. Bad debt written off. You just put it in the first column. Bad debt written off. That is an expense. Now let's check another expense from above there. Sale purchases bank overdraft. Your balance sheet. Then you check discount allowed will fall that this section. Discount allowed class in this case, I can see they allow discount of 125. We also have depreciation on building. We have building there. Let's find depreciation of that building. The rate of depreciation was 2% per annum for cost. So depreciation on building. Depreciation on building in this case will be 2% of what? Of the cost of building. What is the cost of building this year? And since we are using the straight line method, we're going to use 22,500, 22,500. Can you tell me what we are getting as the depreciation for building? Can you find 2% of 22,500? 22,500? 22,500? Somebody? What is the 2% of 22,500? Somebody to give me that. Let me look at it as well. 2% of 22,500. 450. 450. Depreciation on building. Depreciation on building. That is 450. Plus, we continue to the next item. We continue to the next item, which is very important. Very important. We continue to the next item, very important. I can see we are having furniture, picture, and fitting. Picture and fitting. So in this regard, pictures and fitting, what we have to do, you are told to use the straight line method, and the rate, the representation rate is 10%. So anytime you are asked to use the straight line method, look at the cost. The cost is 6,000. 6,000. You have to raise accumulated depreciation of fitting, which is 1,400, and then you apply the rate to get the depreciation for the year. So 6,000 minus 1,400. 6,000 minus 1,400. 6,000 minus 1,400. In that case, I'm getting 4,600. 10% of 600, which is 460. 460. So depreciation on picture and fitting. Depreciation on pictures, fitting and fitting. Pictures and fitting will be 460. Please try. Kindly confirm whether we're together up to that point. Confirm whether we're together up to that point. Just put Y for yes and N for no. And then when we will recap on where we are not together. Are we together up to that point before we move to the next part? Are we together up to that point? Are we together up to that point? I'd like to get the confirmation, a great signal from that end. Whether we all together. 1, 2, 3. Amen. Are we together? Are we together? Good. Asante. Selmi, are we together? Are we together? Are we together? Good. Now we go to the next item. And see we have inventory one channel, return outwards, director's fee. Director's fee in this case is 1,000. 1,000. Director's fee is 1,000. Director's fee is 1,000. Asante 1, 2, 3. Thank you so much. Director's fee is 1,000. Did we have any information regarding the sum? No, hakuna. Administrative expenses. We have administrative expenses. Admin expenses in this case. So class, for the admin expenses, there was additional information. that tells us that as at that was March 2023, administrative expenses accrued amounted to 175,000. Can somebody tell me, is that going to reduce our admin or is it going to increase? It accrued. Our prepayment, it is accruing. Is it going to increase our admin expense or reduce? Is it going to increase or reduce? Is it going to increase or reduce? So if I look at our figure here, admin is 36. 36 what? 3650. 3650. And there was an outstanding balance for accrued. So it's going to increase. So what we do is that 650, it will be that 650, that 50 plus what accrued 700, it is 170, 175. 175. So you add the two, unapata ngapi? When you add the two, what are you getting? You must winding it up. 35, 50, that's 650. 650 plus 650 plus 175. I'm getting 3825. And for the other is selling and distribution. Selling and distribution will be 4175 minus 75 because it was prepaid, so it will remain to be 4100. We are almost heading to our expenditure. We are almost coming to the end of our expenditure. But before then, I'd like to know whether you have written up to that point. Have you written up to that point? Have you written up to that point? Have you written up to that point? Written up to that point. Good. If you have written up to that point, what you have to do is to look for the remaining expenses. Please go and look for the remaining expenses. Put them down here. We have like two. Have like 2, 3 remaining. Put them down here. And then get the total expenses. And from there, from our total income less the total expenses. And tell me what will be the income. Tell me what will be the income. In our next session, we're going to look at the income, and then we draw the balance sheet, and we shall be winding up with that section. Otherwise, as an answer for having time to attend our this session, we really appreciate. May you have a great and pleasant afternoon. Goodbye. So you do that one, we shall be looking at it. And don't forget, by the way, Samit, I want to be, don't forget to contact our customer care for more information. In enrolling in our ongoing classes. And talk to them. You'll be in a position to be assisted. Goodbye.